Hi, everybody. So we are live, um, and today is December 13, 2024, and we are going to discuss the market using our power law indicators. It's a kind of interesting day. We will see on the chart, but also supposedly this was the day when I think 10 years, no, in 2010, when actually Satoshi wrote his last comment on the, on the internet, and then he disappeared. So it's kind of interesting to think about, different events that happen in Bitcoin history when we do these reviews of the market. So it's kind of, he disappeared. He says something like he had better things to no, but he moved to other things, something like that. It's Bitcoin looks like science fiction sometimes, like somebody wrote a story instead of being real. It's so incredible, that this person that created one of the most incredible inventions in all the history of mankind disappeared in that way. And then try to become famous, or probably is wealthy, but very, very unselfish person. Incredible. Anyway, so another significance of this date is that if you compare the other cycles, right? So we have and I'm going to try to make it shorter this time. You can watch the other videos that I made in the past where I give a little bit more of an introduction about our understanding of these cycles. And because our particular approach is that we try to have a kind of a theory of everything, right? It is a virtue and a defect of physicists. We try to understand things in a complete fashion, make theories, etc. So this is why the power law is not just a model; it's a theory. It's a theory of what drives Bitcoin, how Bitcoin behaves, how it scales up over time. I just posted on my X that even the holding time of Bitcoiners is a power law. And, what is the significance of that? We can go deeper another time, maybe in one of the physics of Bitcoin shows, and maybe there is some actionable information there. But that is the idea that there are all these scaling phenomena in Bitcoin that are very interesting and make Bitcoin more like a force of nature, like a natural phenomena, than an asset, right? And so this is our particular angle that is, I think, different from basically anybody else. Even the people that use the power law, they're still looking at like a model, that can give us some guidance, but they don't necessarily adhere to this idea that it's actually a framework to understand Bitcoin. This is pretty unique. Maybe other people will accept that over time, but that is my angle, right? And so it's good that there are different people that offer a different angle, different views, but I think this is one of the reasons you should follow me and follow my discussions, because you have a different angle that is not discussed somewhere else. Anyway, and hopefully it's useful, right, for you to understand Bitcoin. So we have this big picture. Just to summarize it very quickly, we do strongly, I don't want to use the word believe, it's based on data. So think, or maybe believe, but let's use it in a scientific way, in the sense that it's a belief based on the information we have right now, right? There is even a scientific, like, for example, there is this approach in statistics called Bayesian, where we do talk about beliefs. Like you have a model, an initial model, and then as you get more data, you adapt your model to the reality, right? It is okay. That is okay to do if you explain how you change your model as you get the information. If you are transparent, it's actually the right thing to do. But right now, the coherent model that we have is that there are cycles. So there are basically two main signals, right? There is the general overall signal that is the power law, that is this white line here. I'm basically comparing the different cycle in this way. We could look at the entire picture that is basically like this, right? It looks like a straight line if you plot the log of a price and the log of time. Then it looks like a straight line, a very nice, incredible, interesting straight line that for a physicist is a sign that Bitcoin is a power law. And then you see there are these oscillations, right, that we are familiar with. By the way, I want to always emphasize that the fact that these peaks seem closer and closer, it's an artifact of taking the log. They are actually, this one was the distance between this one was 2 years, but the other peaks are like 4 years apart, right? So the way that a physicist will think about this is there are two main signals. There is the general trend, and you can see that is really the dominant trend because the bubbles kind of oscillate around the general trend. And in fact, if you take the support as your reference, it kind of cancel out. We go out, we leave a power law, and then we go back. So the total effect of the bubble is like they don't exist. But they also, that is with, let's say, we will call it in physics zero order, right? So even before you start anything, it's even like kind of a premise, right? That there is this general trend. Then you can say, well, okay, they cancel each other, but it's still part of understanding Bitcoin to understand these bubbles. And you see, this is why we have these oscillations, almost like sine waves that are repeating over time. The other component, you see how the amplitude of these oscillations, it's smaller, almost like some kind of decay. In physical system, you observe these, like if you see a spring that is oscillating, if there is friction, you will see the amplitude of the oscillations becomes smaller in time, right? That is a sign there is some kind of friction in the system when you see this amplitude going down like this. Now, is this going to continue, right? That is one of the questions we have. We have only 3 bubbles so far. One could include usually don't include this bubble in the model, but we could. And if you do, you can see that there is actually a decay even with this one. And it's a very regular decay. You can find an equation that is an exponential. And that allows us to predict, if we trust that this decay is real, then we can predict the next top, right? And really, to be honest, in one end, it's the weakest component of this analysis that we do. At the same time, it's the only piece of information we have. I'm not aware of any other analyst, Bitcoin analyst, that gives a very serious, a very mathematically based description of how big will be the next top based on real data. Everybody else makes guesses, come up with some number. But if you want to focus on the data, then you take the information you have. And it seems that there is this decay. One has to be honest that is based on only 3 oscillations. And so if you make that premise that take this component, the decay, with a grain of salt, then it's okay, right? And then we give at least an idea of what to expect if this continues, right? And given it's a conservative case, I feel okay with it because, I'm against creating FOMO, because if if this mathematical method predicts a 200K top, and we go beyond it, you will be happy. And, I already make the premise that you have to take it with a grain of salt. If I push an idea, that is 500K or whatever, then people will be disappointed. In fact, some people could act on that and could be even harmed by that, right? By buying the top, and you say, well, eventually Bitcoin will go to 1 million, so they still, make money out of it. Well, many people sell, right? When they get scared, they buy the top, they are new, and then when there is a crash, people get scared and they sell that Bitcoin at a loss, right? So we want to avoid that. We want to be careful. I am bullish. I'm super bullish. And, if you trust something like this, look at this. It's going up all the time. So I'm per bull, right? The only time when we have a bear market is when we come back from these crazy peaks. This is what the power law tell us. But, one also has to be grounded and realistic, right? Because we're talking about a serious thing. It's our life, our freedom. We don't want to, believe in Santa Claus when Santa Claus is not real. Okay, let's believe in real things like people giving each other gifts and being a nice seasons, holiday seasons. People are thinking about good thoughts and things like that, right? So let's be realistic. Anyway, so let's go back to our general chart here. It gives us an overview. What did I do in this general chart? I basically took, again, the power law model, the oscillations, we call it, our terminology for that, it's the full model, what we call the full model. Full model includes the general power law trend, includes the oscillations when they are supposed to happen. It includes also the decay and this bottom, because one of the things that is not emphasized enough about the power law model is that it gives you this very, very strong support line, right? You can calculate it in different way. Probably the easiest one is, say, about 60% from the general trend. This is where the price seems never to go below, and so it gives us a reference, right? It's, of course, again, you should never take anything 100%, and even when we talk about gravity or other laws of physics, nothing happened 100%. But it's a very, very strong pattern where it seems that Bitcoin arrives to some kind of support and it seems not to violate that support. One of the things that we believe, and because it's based on data and other things we are studying, is that has to do with the cost of production of Bitcoin. So it's really nice to deal with an asset that is linked to reality in this way by the cost of production. That cost of production and the dynamics that happen between the market and the miners creates a strong support that it can help us in making certain decisions. For example, when to buy the bottom. If we go down again, we'll be, when everybody panics, we will look at this and say, look, it seems that we reach our bottom and we are not going lower than that. And I have made calls like that in the past and it seemed to work, right? It's not about me. It's not that I'm this magician. I'm just listening to Bitcoin and trying to understand Bitcoin with science and math, and it works because Bitcoin is that regular. So again, the general picture tells us that we spent 2 years in this region, that is most of the time we are below the power law, right? And we follow, sometimes we go above the power law when there is a correction. This was COVID. This is when the ETFs were approved. We reach the power law. Interesting enough, right? After the ETF approved, we went up very much because it was a big injection of money and also FOMO. We arrived to the power law. We corrected. We went down, all the way from 71 to about $50,000. And then I predicted this. I say, when we are going to come close to this purple line, that is, the purple line is the end of the year because I'm trying to add, this human time dimension. And they say, but, usually, historically, these bull runs happen in a range between November, January. The first one actually happened after the end of the year. But these other ones, this one, for example, happened before. So I say, and I also thought because of election, etc., probably this time will be more like November. And I call that, many, many months ago. I say November will be around 90,000. And then we will go up because the bull run will start. And I was right? And so how do we know that the bull run starts? First of all, again, because the time is right. And then, we see this exponential behavior. So every time you see in a log like this, in a graph like this, where we take the log of a price and we keep the time linear, a straight line means exponential. So it goes very fast. It goes up very fast. Like a J, if this was a linear graph, but it looks like a straight line. Now, of course, right, there are always corrections and variations, etc. So here, this one was almost a textbook, given the noise, a textbook exponential. But then notice what happened in more or less similar time. That is really interesting. I don't know if it is coincidental or maybe there are other things at play, maybe where we are in the year, there are tax considerations, all kind of things. But, this is 4 years ago and this is here and now. It looks almost carbon copy, In fact, actually what happened is why I told you that the 13th of December was a significant date. We had this kind of consolidation period that more or less started when our consolidation period started. And then on the 13th, last cycle, we had another burst. We had an exponential burst. And so it's interesting to see if that will happen, because you see here, I need to go back to see what happens next, right? So this is what happened next. So if you notice, this was, about the 13th of December. Then we started to go up again. Notice another straight line here. It went all the way to beginning of kind of January 10th. And then there was a big correction. But, there was a big leg up that lasted quite a bit and created a very big change in price. We went from 18,000 to almost $40,000. That was crazy, right? Big change in price in a relatively short amount of time. So now, is that going to repeat, right? So this is one of the things that we are doing right now, because we are comparing with what is happening right now with what happened before to give us some guidance. We are doing it almost every day, basically. We are reporting on that. Because the general trend help us to kind of a map of a territory, right, where we are going. Remember, this is the calculation that we are doing based on this decay that we are observing. And it's a kind of reference, right? Are we going higher? Are we going lower? I think right now, thinking that we go to 200,000 in 1 year from now, because it's supposed to, these models also give us time. The time is supposed to be next year, of a Q4. So let's think in quarter, right, to give us some room for. There is always some noise in data, right? It doesn't have to be perfect. They are pretty much aligned. These tops seem to be aligned, right? But not always perfectly, right? So there is some uncertainty, like in everything that has to do with the real world. So let's say in Q4 of next year, when we are expecting the peak, it's possible that we have an early double top, right? Like we had last time, we had the two tops. I'm not excluding it. Again, if this is a carbon copy of the last year, then we will have a top. That top was around April when it happened. So we will see, right? This is why we monitor with all our tools. We monitor moment by moment what is happening. We are trying to make sense. I'm not using TA. I'm not using all these other things that, even when I draw this line, it's more to tell you what is the mathematical pattern. I'm trying to use physics, mathematics, calculations that as a scientist we will do to try to understand this phenomena. And there are people think that it's all random. It's not random. I already told you about these log periodic power laws that can actually predict like big corrections, because the market behaves in a very precise manner when there are these corrections. And when I see these corrections using these new tools that I'm developing, I will let you know, that it seems that we are going to have a big correction. I'm very curious, for example, if we start to go exponential again, if we can pick up the next big correction. I will monitor it every single day. I'm trying to make actually some kind of alert. The alert right now will be in the Discord channel. So you should be able to see this banner that is rolling under these charts. If you want to join our Discord channel, there is already a channel where we are discussing what is called the log periodic power law. It's not something I invented. It was invented by this physicist called Sornet. And he basically found out that, like physicists like to do, we find patterns that they repeat in many different fields. We call this universality, when we can say, oh, look, light is a wave, the ocean waves are a wave, sound is a wave. We look at something in many different fields of existence, and we say the patterns are the same. There are these similar patterns. We can use the same equations. And these physicists found out that cracks in a material, you can tell ahead of time when a material is ready to crack, maybe because it's under pressure or whatever. And they have applied this knowledge in, for example, with NASA, where they look. I don't know when it's possible that Elon Musk does the same. It has similar tools. They study material that are under a lot of pressure, and they notice that just before a crack, you start to see these oscillations in the material, right? For example, if you apply some sound or something, they go faster and faster and faster. And then there is a break, right? The oscillation becomes almost basically infinite, theoretically. And it's almost like a black hole. We call it a singularity, right? And you can tell something is going to happen next, right? And when people apply that to markets, that he did, he was able to show that a lot of, not all of them, but a lot of corrections in price, what we will call a bubble. So both general bubble like this, but also local ones when there is a big correction in price. They are detectable by this method called the log periodic power law. In fact, you see, for example, this guy, this one, I did by testing with the tool myself. He already published a paper actually on Bitcoin showing that you can detect this correction like days ahead. And so this one, for example, was a textbook example of that. You see how your naked eye can really see, but you see how these oscillations, they became faster and faster and faster. You can apply a mathematical equation that tells you ahead of time, like several days of time, that will be a correction. Then people can do things like, one of the things I would like to do in a case like this is futures, right? Maybe you can buy futures, short, right? And short the market. Like you will not do it spot with spot. You will not sell your Bitcoin. It's not the right thing to do at this particular time of cycle. But you could play with futures, so maybe options or other things, right? For the people who want to be a little bit more aggressive with their investment and more involved, they find ways of multiply their holdings, etc. It's not for everybody, but it's a useful knowledge that if people want to follow these kind of things, they can do. You can also do it with MicroStrategy, for example, or iBit, because they are very much coordinated. And we can do the same analysis with MicroStrategy, but Bitcoin, of course, MicroStrategy will follow very much Bitcoin in this case. But we can do it with both. So I'm going to create a code that reads these things every single day. And then if there is an alert like this, it will be posted on the Discord channel. And then kind of promise to the people in the Discord channel that after it happened and we have a timestamp, we are going to post on X and let everybody know that actually the method works. So, join our Discord channel if you're interested in having this tool. Unfortunately, it cannot be, as far as I know, it cannot be really something that you can do on TradingView because it's very computational intensive. So it needs to be like another code, like Python or something that runs the code. But we can do it on a daily basis, maybe looking even at the other time scales. But I'm very curious. It's like an experiment that I'm doing with you guys. I back tested and it works, but it will be really nice to see we can do this in real time. I already did it with XRP. When I post several times, I'm bragging about because it's really cool. It's more about, again, how cool the physics and math of this stuff is than me. Because I simply ran the code and I did it several days before. Sorry, for XRP I did it real time because I didn't analyze the data, right? But it happened that I was in a space where people were talking about XP, making fun, and then I ran the code. I say, guys, before you run and buy more XRP, the code, this method tells me that there will be a correction, very strong correction. And this was 10 hours before it happened, and then it did happen. And it was incredible because it did it basically real time. But it's supposed to give us this alert several days before. So I will let you know through the Discord channel and then report if it works in these presentations, in these videos. But anyway, so that is kind of what to expect in this bull run. That I don't see anything dramatically change because of ETFs are there or whatever. Everything seems to behave exactly like before. The type of growth is similar, right? If anything, the growth last year was a little bit faster. See, because we can also look at these angles of these exponentials. There was a correction. Supposedly tomorrow, 4 years ago, we went very fast up. Let's see if that happens now. That we also imitate that component. It doesn't have to be, right? But it's possible that as we come to the end of the year, we start to go up very fast. Now, there are people, was making fun of Plan B because it's one of the things I do. He says we go, you say, oh, we go 150. So 150 is over there, right? By the end of the year, and we have only this little time to go over there. And I know it seems not impossible when you look at the log chart, but by the time you undo the log, look where 150 is. 150 is over there, right? So we will have to go like almost vertical to reach 150. It's pretty unlikely. So one more likely thing is, look, it seems that there is a nice little straight line there with this exponential. So we could draw another exponential. So that is a little bit more logical thing to do, a little bit more conservative, but bullish at the same time, because we are hoping that we continue along this exponential here. So let's do that. We could draw this line. Let me change the color, maybe to a green because it's bullish. Okay, so let's see where that is. So it will cross. If we continue along this, right, there is not a big change in how we grow in this exponential fashion, then it's more like 107, something like that, by the end of the year. It is much more reasonable, right? Idea still pretty bullish, but much more reasonable. It's not impossible that we go straight, but look, we don't have a lot of time to actually reach this crazy 150 that is over there, right? I think it's pretty unlikely. But we continue to behave in a bullish way. We are supposed to be exponential. We will continue to do it for 1 year. There are all these other indicators that we can look at in a moment. One of the things we can always calculate what is the average return that we had so far over a period of a month, over a period of 2 months, and then extrapolate that to 1 year and see where that leads us, right? to reach 200,000. Right now, we don't need much. We need about 0.22% a day, something like that. And just to give you a reference, last bull market, we were more like 0.45 in average, right? We had very, very bullish moments when there were corrections, when there was this huge big correction, that we had after the first top. So if you look at how much took in terms of returns to reach that second top, it was about 0.45%, not even half a percentage every single day. Right now, we can check it, but if you look at the last 2 months, it's more like 1% a day. So we are very much in the right direction. We can afford even big corrections, etc., and still keep that average return that will allow us to reach 200. I will be very happy if we reach 200, right? Because you have to remember that now we are playing with amounts of money, right, in terms of the market cap and so on, that are really large, right? And even with all the ETFs, with sailors, etc., it's going to be still a big challenge to reach this 200,000. Yeah. So, and if you go up higher than that, great, right? It doesn't really break anything from a power law point of view. It's mostly challenges this idea that there is this decay associated with the tops. But so far, it's one of the regularity we observe, but as we say, because it's only based on few data points, is one of the weakest regularities. The strongest one are the general trend and the support, right? So that will be the big test for all this theory to see if after we reach the top or we go down, doesn't matter where the top is. And then when time comes, we will go back to the support. That support, by the way, to give you a feeling, unfortunately, TradingView doesn't allow you to project too far, but that support, we could draw another line. So if I extend, it's really, the pink line is, it's kind of this like a formula that is trying to do so many things, like it's trying to do, the decay, the general trend. So it's not exactly the continuing to draw these things, but let's extend. This is where the support is supposed to be, and then we don't even have dates because TradingView stops to give us dates, but it's supposed to be at the end of the year. So actually, we do have a date that is kind of here. Okay, no, this is April 26th. So it's actually supposed to be in December. Maybe it's here, right? So this will go down like this. Let's draw another line. Right. Well, in a more curvy way or whatever, but yeah, like this, something like this. So the support we continue to go along the power law. So it's not me drawing things by hand, even if I'm doing it right now. Unfortunately, like I say, it doesn't allow you to go too far. We could add, actually, see how I added here. We could add this line. But it's supposed to be in the same, if I do it even just roughly in this way, by hand, just trying to follow parallel lines, we go to the 72. And that is supposed to happen at the end of the year in 26. So 26, so 25, when the end of it 25 when we reach the top, end of 26 when we reach the bottom, right? So this will be the test to see if this theory of a cycle reaching the bottom, it's true. It will be a very strong test. It happened in the past. People say everything is different because of the ETF, etc. We are going to watch it, moment by moment. It's a theory, and theory can be proven. It's not, the idea is not that you prove wrong a theory, is that a theory doesn't hold anymore, right? But it needs to be falsifiable. So it's not, ego. It doesn't have anything to do with ego. It's all about testing things, right? And when you make a theory, you say, look, I saw all these irregularities, I saw all these patterns. It seems that this Bitcoin is very precise. Why don't we listen to these patterns and see what we can learn? And then, as a scientist, you test the pattern, right? We have already tested. One of the things I say all the time, say, look, guys, it's not it's a new thing. I show, we have done this since I discovered the power law, that is 2018. So, we have been right since then. It's just we are testing this new idea that many people are claiming without really having done a deep study or calculated anything, just based on feelings, that because of ETFs or Sailor or the strategic reserve, all these things that they come up with, everything is going to be different, right? And the theory says, no, everything is scaling up, so it looks to you different because these are big things that we are now, because we don't understand non-linearity. When you don't understand non-linearity, it looks like, you need a big change before you think that something is different, right? But and you still don't realize that is a continuous scale, right? Because this is how humans work. Our brains are more linear, and we pay attention to big things, but we don't see the scaling properties, right? But we need to think about, use math, use other tools to recognize that it's not something that comes natural to us to think in a non-linear way. And these are very non-linear phenomena. So the thesis here is that doesn't matter what happened to Bitcoin, it will be always proportional. And so all these patterns will continue to repeat. So we are going to have a crash. The market is going to correct itself after the bubble. And we are going back to that reference point that is associated with the cost of production. We will see. Is that theory correct? Is it going to be validated even more? Right? It's been validated so far as part of Bitcoin history anyway. It's not that, it's completely wrong. No, it's been right. The question is, it will continue in the future. The theory usually says, right, that if there is something scale invariant, continues to be scale invariant. That is, again, why this power law is different from any other model. It comes in with, I don't say a guarantee, but a very strong support for being a good prediction, because it's one of the few things that scientists use to actually feel confident in their prediction. If I have something that is scale invariant, tends to be scale invariant. That is one of the things that is always missed by people that don't understand it. It's a scaling argument. It's supposed to be valid in the future. It's supposed to be. If a scaling argument is correct, it tells you no matter how big Bitcoin goes, so in the future, it will continue to behave in this way. That is the part that is why the people need to interview me, and not when they want to understand the power law deeply. It's great, to have other people that do analysis, because you have some other verification of this work. But they miss this point until maybe everybody else will start to learn this idea and concept. I think once we have this cycle, if this is verified, then maybe people will listen more about this idea of scaling. And the idea of scaling is this what allows us to make this prediction, because the scaling will continue to happen, right? After the bubble, that is exciting and so on, interesting, and we can do things, right? Like trying to protect some of these gains using options and other tools available. At a certain point, I want to make like a guide of all the different things we can do at the top, that a range of things that people can do according to their understanding of risk, or taste for risk. If you want to, it's a risk. To me, is a risk even your portfolio, say you're a multimillionaire, and then there is a 70% correction, you're not anymore. That is a risk that you're taking. So I think you should be protected in both directions, right? If we go up or if you go down, and there are ways to do that. That is entire idea about studying the cycle and why cycles are so important. We can use the fact that Bitcoin is both following a precise pattern, but it has also these bubbles. They are important component of understanding Bitcoin. This is why I insist so much, right? But if you're not, if you just want to hodl, then hodl. Don't even look at chart. Don't even listen to anybody, right? If they are cheerleaders and they are making up stuff, okay, you can listen to them, but it doesn't matter if we go up in a bubble, right? I think many people think they are under the illusion that this bubble will continue and then we will have this exponential behavior forever. It doesn't, But the people who want to spend some time and focus and learn things, they can maybe use this knowledge, understanding of a cycle to do things, to multiply their Bitcoin, not necessarily by selling Bitcoin itself. When this will happen, I will do a bunch of things. I will sell some of my Bitcoin. I will buy some put options. We'll do a bunch of things to protect these gains. So the idea is that I'm willing to take some risks. So if this is correct, then I'm protected, right? I'm protected from this crash because I have kind of like an insurance policy through the options. I can maybe buy more Bitcoin, because see, the idea is that I say, when we are here, you don't hold Bitcoin, only Bitcoin. You hold Bitcoin and FOMO. You hold a lot of FOMO. And maybe you can use that, right? That is the entire idea. And today we have so many more tools that we had even the last cycles. So I think some of you, not everybody, should use this knowledge, for your own advantage and understand, make a plan ahead of what you want to do. Anyway, so we are going to continue to monitor. We are going to see what is happening. There are a couple of other things that we can look. There is this liquidity thing that I mention all the time, that it's weird and it's different from all the other cycles, because every other cycle we always had excessive liquidity during the bull run. In fact, the bull run was characterized by having this purple line. The purple line is basically a model that I created. It's not a power law model. It's another model where I'm looking at the relationship between the price of Bitcoin and global liquidity, defined using M2, using many different other parameters. And in the past, when you look at the relationship between this purple line, which is the model, and the white, which is the close price, it seems that we started the bull run with the purple line being on top, and this is indicated by the green shading, right? Means we have a lot of liquidity. The price, the fair price due to global liquidity, that is the purple line, is higher than the actual price. It means actually, if a price was determined by liquidity alone, it should be much higher. And this continues for the bull run. In fact, when we switch and the close goes above the purple, it's almost like an early sign that something is wrong, right? It is all driven by FOMO. The close price is mostly pushed by FOMO, and there is not enough liquidity to support that. So it becomes almost an early sign for the bubble, right? That we're reaching the top. And it seems that we follow this pattern every other bubble, right? With exactly the same thing happened. We had excessive liquidity, when the liquidity did its own thing, and Bitcoin did its own, where it actually was driven mostly by FOMO. Every other single bubble was like that. But, this time is different because we don't have a liquidity associated with the beginning of a bull market. And it seemed that it was going in the direction, right? There was a price correction here, and the liquidity was marching up, and I thought, oh, these things will cross. In fact, we will have already crossed. If we're going like that, we will have already crossed. Then we will have had exactly the same type of pattern where we had a lot of liquidity available. Instead, it started to go down while the price went up, and it's different. and it needs to be understood. Right now, it's stabilizing. I don't know if it is a recovery. Maybe after the end of the year, this will start to go up. We will have to see. I don't know how to interpret this. One interpretation is that there are basically other sources of inflow, and we know, right, the ETF. So this is one of the things where maybe the ETF made a difference, in the sense that we can still push the market up together with Sailor and maybe other investor, and somehow their activity is not detected by these, because it's not the usual type of global liquidity that we have. It's a little bit worrisome, because while it's nice that we can push the price up without the global liquidity, is that enough to reach some of our target, right? With like the 200,000 or even higher, in particular because this motion needs to be sustained for an entire year, right? So I don't know. It's something to continue to monitor. And this is a lesson in why we do modeling, because you're trying to do this modeling. We're trying to be honest. It's different from the TA people, where they tell you one thing, then a few days later they tell you something else. They change their charts. They don't show you what they predicted before. I noticed that over and over and over again. They come up always with something else, right? In this case, we are trying to be consistent and tell you what is continue to be the same and what is different, right? And that is one of the use also of modeling, because we can compare what happened before and what happened now. And then it's a question of interpretation. It's not that the model doesn't work anymore. The model does what you're asking the model to do. Show me the liquidity and the price. Are they correlated? How they behave? It's useful for that. And then it's a question of interpreting, right? If maybe there is some other information that is missing, like we need to add, for example, to this liquidity idea, these other sources, and and we need to improve a model, right? This is still doing what we are asking. We are saying, given all these sources of liquidity, and I can show you which ones I'm using. So I need to go here. See, this is the list of things I'm using to calculate liquidity, all these different parameters. Now we need maybe to add some more and make another model. We can keep this one and make a version 2.0, where we add some other sources, and then see, okay, when you add these sources, you see actually the price, and it's much more correlated with this new notion of liquidity. Also, it's a question of giving weights to different things, right? So maybe these new things we add need to have bigger weights than these ones, right? So it's something that I will try to include when I have a time. This, basically my full-time job, trying to do these things and help the community with this information. So it's still useful to tell us it seems that something is different, and maybe we need to. I think there has to be some kind of link between how the liquidity moves from one place to another and the prices. Maybe these are old measures that are not relevant this time. So we need to improve the model. Let's see what I can show you. I have this indicator. So I was telling you about the returns. Let's look at these. So basically what you're seeing here are the returns, the single returns. So I need to activate that so you can see the returns. The definition of return is price today over price yesterday, right? Tell us how much the price change. These gray lines are basically that. All the different spikes. There are days where we do very well, right? So for example, this one was incredible. It was 1.064. So how you read that is that we went up 6%, right? Because it's a ratio, so 1.06 means 6%. If the ratio is below 1, means we had a losing day. Like, we had some, look at this. They actually is interesting because you can see how bad some of the day were. Like this one was 0.91, right? So 9% in a day. In a single day, we went down by 9%. So, pretty big, but not catastrophic. And it was associated with this one. Probably this was the FTX, when we had FTX. Everybody was going crazy. We had a big correction. We had a even bigger correction in the past, like this one. It's really interesting to look at this, right? So this was like maybe like 14% correction. But from a practical point of view, it's more interesting to look at the averages. So you can average these. I turn them off because it's a little bit too much information. You can turn it on and off according to what you want to study, you understand. If I click here, then I can decide how long this average with this white line, what on which window. Like, for example, we can look at 30 days, then it will look like this, right? So we were going up, very in average big returns, and then we had a correction, right? And now the returns are lower. So you hover with your mouse, you look at what the value was. So right now, for example, it says we are going around. So if you look at the last 30 days, this is what this white curve is. We can make it bigger so it's easier to. Okay. So this white curve tell us what is the average return per day. And if I hover there and kind of try to connect with the last dot, it's like 0.055. That is interesting because it starts to be close to the average that we had last year. Like I told you, it was 0.45. Remember, it was over the entire period, so with the corrections, etc. So one can speculate what will happen if we can continue to do this until November. So if we go up 0.55 in average, and from here that we are already close, to around 100, where are we going? If we can continue in this way, we are going up 5 times. This is what this table is telling us, 5.34, and so that will be 500,000, right? So but I'm expecting realistically that this number is going lower, right? And this is what I draw here. I draw what it will take for us to go to 200,000. That is basically the green line. So we will have to kind of be close to the green line. And also, we will oscillate, we will go higher and lower, but in average, we should be close to the green line to reach $200,000. And in average, we need to stay close to that purple line to get to 500,000. This was based on when this was calculated, where the price was smaller. I think I need to update this because now the price is more like 100,000, right? So this was like, if you go back and look at when we started the bull run, with the price was much lower. We need to stay consistently above a green line to get for the entire year, right? So up to here, when up to this yellow line, we need to stay above that green line in average to get to 200, and we need to be above it purple line to be at 500. And here is also what I'm showing, what you are going to, if we continue like this, like it's possible that we continue like this, and then we have a big correction, right? And if we continue like this, let's say up to March, and that is not impossible at all, then we go up 1.49. That is more 150. So it's realistic to reach 150 by March, but I think then, similar to what happened last year, we will have a big correction, and then we still, it seems like, okay, we are almost there, right? 50,000, but if there is a big correction and we need to recover, we are still going to 200, maybe 250, etc. But so far, everything looks very bullish, very nice. We are on track with everything. By the power law itself, by the end of the next year, we will be anyway around 140, And during the bull, we beat the power law, right? That is the entire definition of a bull run, that we go faster than the power law. So the power law here is more like a reference. And by March, power law say 110. So I would say it cannot be assured, but 110, it's a very solid goal by the beginning of the next year, let's say. But if we continue with this path that we had last 30 days, then 150 is not out of the question. And you can still play with this quantity where, you can look at 60, 2 months or more. So 2 months, of course. Actually, 2 months we were, because of before. See how it works. If I include that very, very fast growth that we had in the beginning, we actually go even higher. So you have this is why it's good to make this longer and longer to be more realistic. So if we take, really at the end of a year, we'll have to look at the entire year, right? That is how you actually identify tops and bottoms. In that case, it tells us 248. So this is actually a cool thing when you average over 1 year, because it kind of tells us all the tops, all the bottoms. It's almost like an indicator by itself. Tops, bottoms. It's really cool. And so on. Tops, bottom. Anyway, so we have all these tools, and we are trying to make sense of these, methodically, and putting all this information together. You're familiar with the clock. I like to see these, like basically the clock is telling us we are coming here where supposedly the frenziest part of the bull run will happen. And, the blue line here represents the full model. It's trying to catch the tops. You see how it was able to get the top here, the top here, the top here, and the bottom. So the bottoms usually happen. So if you think about the clock, 12 is the top, 3 is the bottom, 9 is when things get really crazy, right? And we are basically there because it's kind of the end of the year. And you see, we are the blue line is still below because it will start to go up as the bull run happens. And basically the two lines, the red line is the normal power law, the straight line, and this one is the one that is oscillating. The one that is oscillating looks like here in this spiral shape. It looks like a kind of like egg-shaped spiral, right? The other one looks more like a circular spiral. So the red one is the normal power law, and the other one is the full model. Full model try to follows the top and follows the top bottom. So they are not cross yet, but then eventually they cross, right? And the blue line will be on top of the red line, and this is where it's supposed to go, right? This model, again, it has this decay, and is predicting a 200,000 top. And everything looks so far exactly like the clock is predicting, and so it looks nice. Maybe the last one that I want to show you. Let's do this for the people that think the cycles are not going to be there. This is one of the strongest correlation I found with what is called macroeconomic indicator. This is the PMI indicator. It's something that is used by industry to kind of time production, electricity cost, etc. It looks at all these factors. It's basically a sentiment type of indicator, but it's based on real data. How much production cost, how much sales, different industries have, and so on. The cost of electricity, and you see it's very much correlated. So the purple line is the indicator here. The white line is the price, and you see it marks very precisely the tops and the bottoms. Actually, it's weird. It's interesting enough where the Bitcoin bottoms happened like about 1 year before the bottom of this cycle. So, but this is one of the reasons why, if you see something like this, you will not think that ETF made a big change. Also, because you see, this ETF came about here. There was a correction in this index here. Notice how Bitcoin follow that correction after the ETFs. So everybody that says the ETF are changing everything, well, they didn't change here. We will see if they change here, but here is some evidence that Bitcoin still follows this indicator, this macro indicator, even after the ETFs were approved. So nothing's really different, right? And it's done every month, so we'll need to look for the next update to see actually if this bull run is associated, in Bitcoin, is also associated with kind of a bullish signal here for the green line. We can continue to monitor. Let's talk about the last indicator, and then we can end this. So this is this indicator that I call the force field, and what this shows is basically these green lines. This is why I call them a force field, right? It looks almost like these lines you get when you put some iron on a paper, right? And then you put down a magnet, and all the iron gets organized in this field, right? That shows a magnetic field pattern, right? It looks kind of like that. And basically what, unfortunately, like many things in TradingView, you have a limitation. It doesn't allow us to get more than 500 of these lines. So this line represents basically the slope of a power law calculated every day. So I calculate the slope every day, and then the slope of these curves are the slope that I calculate, and the size is proportional to the momentum, to how fast everything is happening. So it gives us a kind of a visual pattern of the action of a price, right? So when it's green, we are beating the power law. The power law in this case is the red line. The slope is faster than the power law. When it's red, it's slower. But if we could, I already tested it myself, but if you could plot it here in this area, when we have a bull run, the indicator turns green, and it never stops to be green until the top. So it will be cool to see, again, if we can detect major corrections by a change in color of this indicator. So until the bull run, it should be green, and so far has been green. And also, what this indicator does, it projects, it's kind of like a weather prediction, but people think that there is nothing in weather predictions, but we are becoming better and better, right? When we tell you there is 60-70% chance of rain, these predictions are becoming better, right? In the past, it was almost a joke talking about how meteorologists were not good, but right now, entire industries like the airplanes, the flight industry, right, is based on these predictions. There are times where we decide to not to fly, right? The flight needs to be postponed because there is a very high likelihood of snow or something, right? So it's kind of like that. I think actually probably better than weather, in the sense that Bitcoin follows very precise pattern. So it's calculating using the latest stats of these slopes, what these slopes are going to look like in the future. And this is what you see in this little cloud here, right? You see this cloud is basically kind of a range of possibility based on stats. So imagine this is kind of like a bell curve of possibility where the top and bottom of this cloud are kind of some of extreme ranges that we can get. So most likely we are within this cloud as we move up. And shorter is the prediction, more likely it is as you extend it farther and farther away, it loses some of its predictive value. But the blue line here is supposed to be the most likely direction. So we're going up, if you didn't know. And that can help us again to kind of estimate where we are going, again, under the assumption that everything is keeping the same. So we can look at the end of the year, right? So the end of the year is here. I go up, I look at where that line of end of year crosses with the blue line, and the blue line tell us about 113 or 114. So by the end of the year, if everything continues to be, that is similar to what we were talking about before when we look at the returns, right? Remember, it's very similar, and so it's nice that different methodology come up with similar estimates. Again, this is one of the things that you will do scientifically, seeing if different things converge to the same answer. And in this case, again, the prediction is about 114 for the end of the year. If you want to extend, and like I said, more you extend it, less reliable it is, all the way to, let's say February, then we are talking about 135. But again, it's close to what we were saying, right? We are talking about maybe March to give us 150 or something. And these red and green line represent kind of extremes, right? Where we could be within this time frame, anything between 150 and 94. This is kind of the most, the range of this prediction, right? So it's kind of cool tool, right? They tell us moment by moment what to expect and where we are going. So let's hope that this green line stay green, because that is one of the signs of the bull run. Okay, I think I'm done. I'm going to look at your questions. Let me check which questions, see if I can answer some of them. Okay. Okay, mainly, let's see. Let's show this one. This one says, it doesn't show. Okay. Many power law analysts are suggesting we could see the top by April or mid-June. What is your view? Could it happen that early? Yeah. I mean, if the data continues to be like this, we are going to reach a point where the deviations are so big, and they are going to be relatively early, like we are saying 150 by March. Maybe we even get 200, by April, and then, or even mid-June, right? So if that continues and there is not a major correction, then the idea will be that the market is so far away from where the general trend is, where the market will respond with a correction. And so that could be that will create like a double top, like we saw the last time. And then after the correction, I think there are still very strong periodic signals, like this PMI, for example. They want a top at the right place, that is quarter of 2025. So that will create another top. Now, last top was slightly higher or similar to the first top. That is something that I don't know, right? Is it going to be like that? Is it the first top going to be smaller than the second top? We don't know. So these are some of the things that we are trying to monitor, we're trying to understand. But yes, it could be that we have two tops. I'm going to stick with this idea that there is a top at the end of a year or next year, because this is what seems to have been the case for all these years, and is so strongly correlated with all these other macroeconomic type of indicators. But let's see. We are testing all these ideas, right, one by one. Okay. Hi, everybody. Everybody that says hello. Hi. Did anything change? Okay. Here, show. Bratti check. Did anything change from November 25 top version model? No. No. I say, quarter. I'm saying quarter 4 of next year. So basically November, right? But I'm open for an early top, like a double top, like we had last time. What created the double top was COVID. Very likely, right? It's again an hypothesis because there was a lot of liquidity. There was all these stimulus checks. People were at home. They were bored. We were playing with the stock market, with Bitcoin. And so that probably what caused the early top. But then the idea, that I was explaining right now, is that the market, for some reason, there is some driver that wants to still have a top at the right time. And so we will see then another top. That is my hypothesis. Let's see if this hypothesis holds, right? So I'm sticking with that because I don't see anything that changes this picture. Thank you, Space Credit, Love G Podcast. Thank you so much. It's a different one, right? We are long and I'm trying to be reasonable and not having fancy music in the background. Maybe with time I will improve these fancy things. But right now I'm trying to focus on the substance, right? Metcalfe law, the basis of the power law. Let's see. Is a very good mathematic fit, is growing network. Exactly. So, the general idea is that we have this general pattern that should hold, and then we have these oscillations, right? And the idea is that they come together. Right now, because some people say, well, the power law doesn't say anything about the bubble. Not true, because, for example, if you look at the log periodic power law, theory of Sornetti says that there are these two things that work together. There are bubbles, there are power laws, and basically Bitcoin is a huge, big power law. That means it's kind of this system that is on the edge, right? It's because power laws appear when there are phase transitions, when you go from water to ice or ice to gas. This is when we observe these power laws, when we see things that are on the edge and kind of a dynamic edge. Like this is why a lot of growth pattern, like in shells and horns and thorns and many different things like that in nature follow power laws, because it's this dynamic edge working on the border between stability and growth, right? Is when you get these power laws. And Bitcoin is like that. It is fascinating, right? So it's a guide for us. It's a guide because all the people that want to break it, they don't know what they're talking about, both in terms of wishful thinking, but also on the health of a system. It's actually a good thing that Bitcoin is taking this time, because the end of the story, if you want to summarize it, is basically by being a power law, it still can grow, but it does it in proportional fashion. So, in the beginning, it could afford to double, right? So think about, right? The idea is this: if we double, in the time, we go up 65. So because 2 to the 6, it's 65. So imagine you are year 3, and you say, how long will it take to go up 65 times? 3 years, because basically you are doubling the time. So from year 3 to year 6, it went up 65. Now that we are 16 years, right? Bitcoin is 16 years. It will take another 16 years, you see, to go 65 times. We are going 65 times up, but it will take now 16 years more. You see, things are slowing down. And it's okay, because when he did it at year 3, the system was much smaller, right? The price was a few $100 or whatever it was at the time, or even less. And so it was easy to double, or to go 65 times up, right, in 2 times the time. But now it's going to take to do the same thing 16 years, because we are talking about trillions of dollars. You see how it works? And it's a good thing, because you need the infrastructure, the miners need to catch up with getting more miner, because remember, hash rate goes up with the square of the price, right? So you need to, if the price went up 65, you have to take the square of that, whatever it is, a big number, to actually catch up with that hash rate. So it takes time for the mining industry to develop, for the laws, for the institutions to join in, to have a legal infrastructure, to have even psychologically all the investors, right, to join in. It's a good thing. We should actually celebrate that Bitcoin is a power law. It's like all these other natural things. The people we wanted to break because they want to become millionaire the day after tomorrow, we think this is not bullish enough for them. It is crazy. They don't have, I think, the best interest of Bitcoin in mind, or they don't think about it. I'm sure they have good feelings. They are Bitcoiners like everybody else. They want the good things for Bitcoin, but they don't realize they didn't spend the time to study the implications. It's not like any other model. It tells us something deep. This is what I'm insisting. There is something deep in this message that Bitcoin is a power law, if it continues to be a power law. All right, Joe, silly question. Why the dates on x-axis half? Where? Why the dates on x-axis is half? Log pilot, can you elaborate in that question? If you're still around, I don't understand the question. Hi from Ukraine. I hope you're safe. Panbi, your family is safe and everything. I know it's difficult situation over there. All right. Extrapolation. Ciao, Joe. Looking at all your questions. Okay. If the alert it's several days before, but Bitcoin is run up exponentially. Again, I don't understand. It is not a risk and possibility when even after the correction, the new floor after correction is above where the alert hits. So if you're talking about the log periodic power law, right? We cover that in that show that we have on Wednesdays. And we can go deeper. In fact, we are going deeper. So I suggest you to follow the show, because we will go deeper and explain it better. But basically, what it does, it tells you ahead of time, several days of time, that will be a correction. Now, the size of a correction is still something that I'm trying to understand, if there is a way of tell us how big the correction is going to be, something that I'm still studying. And how precise it is, you can, like in everything, you can choose different thresholds. And for example, you can use a threshold where you say, look, I'd rather have few signals, but I want to make sure there are very few false alarms. And right now, the one that I'm using, it seems to be correct all the time. It's relatively rare signal, but when you get a signal, there is a correction. Now, the size of a correction, we will have to see if there is a way of estimating. But right now, it seems that it has almost no, false alarms that something is going to happen to the price. And it gives you a window, a few days. They say something is going to happen in this range of data. So it's a very useful tool. And it seems too good to be true, but it's real. People have used it in the past. Now, how we use it, it's something that we need to think about, right? What you do with that? But it's real and it's there. Now, about if we reach the floor of the big cycle, etc., that we will not know by this method, right? The theory behind is that when the correction happens, people sell for a reason. Somebody today was making an analogy, and they were saying there is a reason why the bull run lasts 1 year and then the bear market lasts 1 year. And that's to do with tax implication. It's possible it's one of the reasons why, because, if people buy Bitcoin, at the bottom, like some of these savvy people do, because a lot of people study these things, not necessarily the power law, but we have other method, etc. And if you're a whale, then you can actually kind of make the market do whatever you want, And so there are these whales, so we maybe say, look, if I do these things and I buy at the bottom and then I sell at the top, I need to wait more than a year, right? About 1 year, because then you pay different type of taxes if you wait 1 year, if you hold an investment 1 year. Yeah, at least in the United States, there is that law that says that if you keep an investment long term that is more than a year, you get one type of taxes. It's much higher if you buy and sell all the time. So that could be one of the ingredients of the equation that tell us why it takes that amount of time. And one of the things we notice, I have studied this very precisely, when we go down, every single bubble we went down in a very precise manner, about 0.2%, 2% a day that were the return. We were losing that, negative, right? And if you calculate that for 1 year, then you can calculate where we are going. So we can do that, right? We can, when we are reach the top, we can say, okay, let's say that we went down like we did every single time at about 0.22% a day. Where is that floor? And we do it for 1 year, right? But these are some of the things that allow us to make some good estimates that are based on math, on reasoning. Nothing is guaranteed, but at least give us an idea, right? That is the entire idea. That is what is behind what we are trying to do here. Instead of, on one end, people say, well, it's all unknown, who knows, whatever. That is not the case. They are wrong to say that, right? And the other people that are using these magical tools like TA and stuff like that. So this is something as close as we can make a science of Bitcoin, right? And hopefully it's useful and actionable, right? It's better than just knowing anything, Thank you. Thanks. Modern Day Debate say thank you for the stream. I will continue to do, because I think it's good for me and hopefully for you guys. Prediction of the year and of the year. Yeah, I think we will probably be around 110, 115. Again, based on what we have done so far. This is what this indicator showed. This the force field indicator. Okay. Modern Day asks about the top. Yes, 200K is what we are thinking. I feel confident. There are days where, when we have this correction, say, are we ever going to be there? Right? Doesn't feel like that sometimes, because 200K is a big deal. Remember, we're talking about other 2 trillion increase in the market cap, right? And even if you know how they do this, they say this, there are these multipliers, right? And people use anything between 10 and 50 because they say, well, it's not really that you need $1 coming in to make the market cap go up $1. It's more like, if there is $1 coming in, the market cap will move by $25, right? I never follow exactly. I'm actually probably, I have a long list of things I want to do. I want to understand better how we come up with this number. I know where it comes from. They say, well, Satoshi is not moving his coin. A lot of people are not moving their coin. Maybe there is a better way of calculating, in particular now that we know there is a formula for holding times, right? I posted on X, is a power law. And so maybe we can use that formula to calculate what do you expect to be this factor, right? This multiplicative factor. And, even if you let's say use 10 to make it simple, right? Well, we are talking about $200 billion coming in 1 year, right? Yeah, because we will have to go up $2 trillion. So if you reduce it by a factor of 10, we are talking $200 billion. That's a lot of money in 1 year, right? It's not impossible, but that means 200,000, right? By the time people think about 500,000, etc., imagine how much money we need to actually reach that amount, right? I think they're unrealistic goals. 200 seems possible. Okay. We are still, and you guys, if anybody needs to leave, of course you can leave, right? I'm taking my time to answer these questions because I want to cover as many questions as possible. This bull run until says we are still early mid stage in this bull run until the channel it's 50k subs. I haven't seen explosive growth. Yeah, that is another thing that I want to do in my to-do list. Ben Cohen, I like some of the things he does. One of the things I really like that I think is super creative and super. I'm admiring his ability to actually gather the data. I already started to look at. There are some apps that give you, like you can ask, for example, how many YouTube views there are on this particular topic. Some apps give you that information that is public, and then one could use this app, aggregate them, and make like a social indicator. It is really cool. One time I took Google searches for Bitcoin, and I show that is a power law, and in fact is very close to the Metcalfe law. That says that number of nodes in a network, in this case, the people that do the search is proportional to the value. So it's another level. The social network is another way of understanding Bitcoin. And so we could try to make an indicator like that, to kind of gather social information about, Bitcoin, maybe Google searches, X activity, etc. It's more a question of how do we collect this information, and then we could make a trading view indicator or something. Will be really cool. But yeah, social activity is very important in how Bitcoin behaves. Hey, because this one of my favorite people on X. Okay. Okay, let's read this question. People seem to think that SBR will be the trigger for large nation state hodling, and this will push the price. I know, guys. So, and we discussed this a little bit in other shows. Look, my thinking about this, and again, I am a contrarian, okay, is it's a good sign. But first of all, please don't put all your hopes on politicians, okay? Politicians make promises, they say things, and then they don't follow, right? I don't care if it is Trump or if you're anybody. They are all like that, all of them, okay? The good thing about the current administration, and I'm going to acknowledge that, is that they are much, much more friendly towards crypto than the previous administration, no doubt. And so we are going to fire Gensler, we are going to do a lot of things, but let's not try to believe in Santa Claus, right? Because it happens every single time. Every single cycle, there is a Santa Claus, a new Santa Claus, right? I told you many times, I was under the shower in 2017. I'm like the old grandpa that tells you the same story. Did I tell you this story? And you have to be nice. You have to tell the grandpa, no, grandpa, you never told me this story, right? And it's the same story. I told you this story where I was taking this shower and in 2017, and my portfolio was exploding, and I was thinking maybe I need to sell off. And the little devil on my shoulder was telling me, no, this time is different. This time is different. People were talking about institution joining in 2017. Do you think it's a new thing? Okay, the strategic reserve is a new thing. Okay, look, how much are they talking about? They're talking about quantity of Bitcoin that are similar to the ETF, in fact, smaller than the ETF. So you're basically telling me it's like another ETF that joins in. It's not going to be that dramatic, but people say, oh, then the game theory. So if United States does it, all the others does it, and then they don't sell it. Well, why they don't sell it? new administration come and they are stupid and they think that the strategic reserve is not a good idea because of their political views, and they sell. I don't know what is the legislation going to say. Who is going to decide? Can the president decide to sell? I think usually the president has some power over this strategic reserve. So if a new president after Trump decides he wants to sell, right, he can. So I don't know. See, this is why I love the power law theory, because it's not because I created it. It gives me a framework to understand Bitcoin. But so far is the most solid one. So what the power law will say about this kind of things is these are the early signs that are on the path of the power law, that we went from the interest of individual to firms to institutions, now nations, right? We already had some nations like El Salvador or Bhutan and so on, and now large nations, but it's with early steps. So if they do anything, it will be symbolic and will be on the path to full adoption. But right now, full adoption and something dramatic that will change the power law is not yet there, because you will need, right? The idea of scaling is you have to have something proportional to the entity that is involved. So if we are talking about a nation, and a nation has, like look at the GDP, for example. What is the GDP of the United States? In the trillions of dollars, right? We will have to have many trillions of dollars, more than just a couple of trillions. We will have to have tens of trillions, or maybe even hundreds of trillions before something dramatic change at the national level. Right now, if anything happens, if this bill passes, and there are a bunch of ifs, if, right? We are talking about politicians, so don't trust them. Is going to be more symbolic than anything else. Yes, it will help with the price, will be one additional thing that will push the price up. But right now, I'm going to work under the assumption that even that is not going to break the power law. If it does, then okay, then we can understand it, we can study it, we can see, okay, what happened. I'm going to trust the Bitcoin as a system. It's an intelligent system. It knows what to do. There is intelligence behind the growth of Bitcoin. When you have it's almost like an organism, right? It has its own intelligence, it has its own adaptability. That is the entire thesis behind the power law, that knows what is going on, right? So if it does something different and it breaks the power law, okay, then maybe it's the best for Bitcoin. Let's see. Right now, if you use the power law as a framework to understand everything happens around Bitcoin, you will say something like I just said, that this is a good sign, we're going in the right direction, is what is needed to go to the next step, but it's not something that is going to break this path. So if the cycles repeat again this year, the top is going to be November, correct? What is going to be the price of the power law and the price of top deviation? Right, good question. So the power law says 130. So if it was only for the power law, by the time we arrive in November, it will be 130. So that is also a good thing, right? Because kind of it's almost the worst case scenario, because during a bull market, we usually go higher than the power law. And so the power law could be used as a kind of a worst case scenario, 130 by November. But it's still great, right? It's 30% from where we are now in less than 1 year. You want to make 30%. That is the crazy thing about the people that think that this is not bullish, right? We're talking about beating the SP 500. What is QQQ, right? QQQ is one of the most successful ETFs over there. Do they do 30% a year? I don't remember. I had this memorized at a certain point. We beat, even with 30%, we beat almost everything else, okay? And it's amazing, right? In basically less than a year. But we are supposed to be more than that, right? And the calculation is 80%. So we are going up 80% above the trend, according to this decay. And so this is why we came up with 200,000, because it's about not quite twice that 130. It's more like 80%. Just to give you a feeling, the previous bubble was more like, if I remember correctly, almost 2 times the trend. The previous one was 5 times the trend. The other one was 10 times the trend. So you see how it goes down. And so this is what we are expecting. Okay. Yeah, so this again about the log periodic. You use the log periodic, tells you it's going to happen 3 days from now, and you open a position now. Well, I will do it where you have a very small chance to be liquidated. So don't do it with 100 leverage. Don't do it with 50 leverage. Do it with a small leverage. Don't be stupid, because it's better to make small gains and accumulate these gains than doing stupid things. Because all the people that get liquidated all the time, these are people that do it in a stupid way. Maybe some people have a method. Maybe they think, they get liquidated 2 times and then I am successful 5 times. I'm still winning. I don't know. I don't want to play that game. I'd rather do it in a way where I have enough margin there, where if I open a short, I'm sure that even if it continues to go up for a couple of other days, I'm not getting liquidated. And when there is a correction, I'm already have my position open. You can also monitor it, right? Where you can maybe start with a small position today, you open another one tomorrow, then another one the day after tomorrow, and then finally the crash happens. So you can game it. I will say right now, because we are all experimenting with this and we are doing it together, let's test with a small amount, few $100 etc. Until we get it, we understand how it works, right? And then we can calibrate it in a way that makes sense, right? Don't do anything stupid, please. Okay, be careful. Just be careful. It's treat it like an experiment, Okay. Bitcoin just pumped 1K in 5 minutes. Yeah, Bitcoin is amazing. Okay, I'm trying to scroll because you guys asking so many questions is really cool, but I'm also trying to close this show. Yeah, so MicroStrategy is another thing we are going to. I didn't talk about MicroStrategy today, but we can try to do next time. Yeah, so there is a relationship between the two. This log periodic method works fantastic because there will be a lot of situations where people go crazy with MicroStrategy and all the leverage is involved. The log periodic method will work really, really well. In fact, I already backtested and we caught the last correction perfectly, like several days ahead of time. So this is another thing we are going to monitor. Maybe we can spend a little bit more time next time with MicroStrategy. Okay. The fund needed to move a market cap of an asset might be related to an anti-derivative of total liquidity. Yeah, I'm always open to new methods. So if you have any ideas, you can always DM me and we can explore it. It's mostly a question of having the time to do all these kind of things. All right, guys. Joe, the inclusion of MicroStrategy into QQQ is huge. Now, anyone who is possibly investing in that index has exposure to. Yes, it's fantastic. That is the beauty of all the ecosystem. That there are so many ways that people are getting exposed to Bitcoin through the ETFs, to MicroStrategy. They're all part of this incredible, evolution and process where, the goal. I know that for the people that are not Bitcoiners sounds crazy and absurd, when we are telling them, look, there will be a day not very far from now when everybody on earth will use Bitcoin because it's going to be the monetary standard for the entire world. It sounds crazy, sounds fanatic, but everything is aligned. Everything is happening exactly like we said it was going to happen, right? So for the Bitcoiners, it's almost obvious, but it's amazing to see it happening. I mean, there are days where I wake up and I say, is Bitcoin real? Am I dreaming? Is it like science fiction? Because it's crazy. In particular, if you have been around this thing for as long as I have been, when I can imagine for the people that mined, the first Bitcoin. I downloaded the wallet in 2010, and they didn't do anything with it. I'm so mad about that still now. But I bought my first Bitcoin in 2012. So, and I can remember the feelings, the emotions. Like, am I doing this? Is it a good idea? And it's crazy seeing it developing all this time. Through the ups and downs, and it's incredible. And I'm very glad to all of you guys that you're following me and supporting me, because you made a dream come true. That is basically doing this full time now. This is my job, so I'm very, very grateful, and thank you for all the support. And it's amazing, that you are allowing me to do this. We're doing this together. So this is why I want to give back as much as possible, doing all these indicators, doing these shows. So let's see. We are part of something amazing, I think. All right, guys, thank you so much. I'm going to end here, and let's see each other next week. Thank you, guys. Bye.